Good whatever it is. Just afternoon here in the UK, in the not very sunny UK. At least it's not as bloody cold as it has been. You can't help but see I've got a free ebook, so I'm gonna plug it now and in the middle when more people are on, and towards the end as well. This is free. You go to the Kindle ebook store. It's a train journey read, but the idea is for all people that are new to trading or struggling with it a bit, it's a set of rules. It's as simple as that. So what these rules will do is make sure you're not one of the 90% of people who blow out within 3 months. If that sounds interesting, please just go away by the book. And most important thing of all, give me a review. You know, if you don't like it, say so. If you like it, which I hope you will, because I mean, there's not very much contentious stuff in there. It's just really good advice for people starting out trading or people who have been trading for a while, realizing it's harder than they thought. What it does is it keeps you in the game whilst you learn. All these rules will keep you in the game. And the interesting thing about them is that they're very hard to keep. So even though it's easy to write them down, oh my goodness, it's hard to keep them. You know, because your brain is pulling you either way. And, you know, anyone who's done any trading at all will understand how flustered you get when things go wrong. You'll understand also the highs when, you know, get things right. But everyone will understand it's a hard game, and these rules will keep you in it long enough so that you can work out whether or not you can make it as a trader. I mean, they're not going to teach you how to make money overnight, and a lot of people will say, "Oh, yeah, follow me. I'll show you how to make money. Look, do this trade, do that trade." You know, that the basic stuff, the basic understanding of how to stay in the game is way more important than any strategy that anyone can say, "Oh, this makes money all the time." And bear in mind that no strategy makes money all the time. Otherwise, there'd be a computer doing it somewhere, making infinite money, and we'd all know about it because somebody would be worth 60 billion trillion dollars, and we'd all wonder how. And he'd say, "Oh, this thing in the market." It doesn't work like that. Okay, so trading isn't that simple. Anyway, enough of the plug. Let's talk about some of the prices. Obviously, I'll plug later. If you're watching on YouTube, please like and subscribe. I keep forgetting to do that, and apparently that's one of the dumbest things you can do as a streamer on YouTube is not remind people to like and subscribe. So like and subscribe, please. Thank you. Right, on to the prices. I'm looking at 4-hour Bitcoin here, and in the past few days, weeks, I've been, you know, noting this. Don't forget, anything sub sort of 28 we regard as the value area. So let me just draw that on. In fact, we'll go to the weekly first so we can see why we think it's the value area. Because we're now down in the area here below, like I say, below the previous low. So anything from here downwards, well, come on, stupid. There we go. So anywhere from kind of here downwards, we saw as value. The advice from us at all those times was DCA in. So buy some. I bought some as it dipped into it, sort of 28-ish. I bought some more at 24, 22, a bit at 20. You know, my average is probably around where we're trading now, 23. And I'm very happy with it because I have not bought it on margin. I've always bought it cash. And I'm sitting there and saying to myself, well, in a 3-year period max, I expect to be able to triple this money, probably quadruple it, maybe even more. And so I'm just going to sit it there, and I allocate my funds to it, and I did that. And if you've done that all the way through, you shouldn't have got hurt by any of the dips. And if you had any more, you know, I didn't want to put any more in because I'd already allocated my full allocation by the time we got to sort of 20 and 18 where I finally filled it up. And the thing is, you're never going to catch the bottom. So anyone who paid 15,000 and something, like idiots like Moon Carl, think we're stupid and they can just write in, "Oh, look, I bought these really, really cheaply." No, anyone who with an affiliation to an exchange can get trades put in if they want. I don't believe he's made any of those trades because certainly he said it was the end for Bitcoin when it reached 18,000. So why he'd be buying it, God knows. But that's enough bitching. Let's actually look at what we've got here. So we've got the value area, and what's it going to do in the next few weeks is what everyone is on about. So going back to the 4-hour, I think it's done you know, it's trying to get the shorts out. Okay, so what the masters of the universe are trying to do is get rid of the shorts. So we're in this whole area. You know, if you come to our website at mayfairmethod.com and join our Discord, if you pay up, we'll tell you why stuff is going to happen like this. But if I just tell you this is how I think stuff is going to happen, then you know you can get that sort of advice for free. And what I said over the last few weeks is I said it would, you know, as it started to rally, I said it would first break this previous high. Let me switch off the magnet. It would break this previous high, which it did, and then I said it would break this one, which it did, and I still think it breaks this one. Now the question is, what they're trying to do is make everybody who's been short, I mean, if you were short this, say you were really cool and you noticed this consolidation here and you sold into here, your stop loss would have been above this previous high. Okay, and the same would be true of all these other things. So if you come in here and you've been clever enough to sell this return to that level, you know, you'd have been short, maybe you'd have covered it, maybe you wouldn't, and on the way up people will have shorted and used the recent high as a stop loss level, and so of course it's going to pop through that and stop you out, and then come back down and make you think you were foolish, and maybe get into short again because you thought, well, it only just popped me out, and then of course it bangs straight through it. And the other thing you notice about Bitcoin is when it gets going, it doesn't have any of the pullback. So this, if this was, you know, a typical currency pair, you'd be looking at stuff that does this, you know, break through that level, retest and go. But it just refuses to do that. It just goes up, gives nobody any chance. So at the moment, it still goes up, I think. And I think we do break 25. You know, you can't quote me, but I'll be happy enough if we do. But I won't be selling any of my longs because this is a long-term long. I might sell some if we get up into this sort of area. So we've got all this liquidity here, which it's going to look for. And, you know, I'm not 100% sure that my partner Lewis agrees with me here, but I think that the only way to get people to think it's all over and, you know, Bitcoin's going up again is to break into this area and perhaps even just tip over the top of it. And at that point, everyone thinks, here we go, back up to 60, 70,000. And of course, then there's a massive rug pull. So that is, in a nutshell, what I think about Bitcoin at the moment. Now, don't forget this is AMA. So if you are watching live, please do feel you can ask questions. Personally, I think that we do get a pattern. I don't know how high it goes, you know, I'll be honest. I'd love to see it do this because that would mean it is, you know, things are going exactly as I thought. You know, we'll get this, we'll get, you know, a few more people, and then bang, rug pull right back down to these levels. So, you know, if you're looking for short-term trades, I'd say, you know, it probably won't hurt you to be long, but, you know, it could come off from here. I personally think it needs to break the other high at 25 before it comes down at least. And if things do get very exciting, then people will just think this is brilliant. Bitcoin's back in the game. You know, all my red bags, you know, I'm long from 40 odd thousand. It's coming back in, and imagine the feeling they get when it goes bang back down to 20 or whatever after that. They'll be thinking, I had my chance to get out. What a dick. I will sell. I've had enough of this. And really, I don't think Bitcoin goes up back to its old levels until nearly everybody has said, sod this, I've had enough. I'm just going to keep my head down and work for a bit. Times as hard as it is, you know, I'll write that money off. So that is where I think we are. Checking out the chat. Has anyone put anything in any chat? Yes, Terry Dragatis. Hey, do you expect to BC 47? The final way we've spoken about, or is the count now invalidated? Well, the count was invalidated when we dipped and stayed under 19, because if we go back to, I think the daily will show this. So here's your monthly one, and that's at 19.7, and so we definitely got Elliott Wave count invalidated, and we are arguing with a few people right now about what that means. I mean, we're not Elliottians, we're not deeply fundamentalist Elliottians. We understand Elliott Wave and we use it as a bias. So for us, even though the 1-4 parity thing should not be allowed, you know, the fact that it's broken through it means the Elliott Wave is effectively broken. It doesn't change our bias, which is down here. This is an area where we should be long and not short, and we should be looking for long-term accumulation here. And there are a number of things which I like about the fact that this could be accumulative. I really love that even this volume here, and which was after a very stunning fall, you know, from the 40s, boom, straight down, you know, to 25. I mean, that is a shocking fall. That much volume. This one here, that much volume. This one here, which is a shorter one, 21 down to 15, masses of volume, and that tells me that, you know, the big boys accumulate. They like accumulating down here, you know, and in here, big volume again on the rally. You know, the boys have bought it. They're looking to sell it out to you one more time. But you know, these are decent levels, and that's what I think. Now, in answer your question, Terry, I don't think it. Yeah, I don't think so. No, I think the fact that we've gone down to 15 means that 47 probably not. Like I said earlier, I think the top of this level will be sort of early 30s. You know, I don't think we go much higher. I think it just needs to go high enough to get everybody keen again, and then bang, down we go. Now, it doesn't mean it necessarily has to, but at the moment, the signs are that it probably will bang back down. So another potential pattern you might see is one that does this. Oh, come on. There we go. One that does this and then comes down just to this level before bouncing away. But I think that's too easy. And as a result, I don't think it will happen. So to reiterate, I don't think that happens. I think we get a rally, you know, several mucking about up here and then a rug pull, possibly after a big spike, rug pull. And this will be a good sign, believe it or not, because that means it's doing as we expect. So no 47, 33, I see as a thing, but it depends. Don't forget, it can go through several iterations of this. So rather than do that, it can just say, well, let's get above this line, which is 25 and change, get people all interested and pull the rug then. It could do that. So, I mean, I'm saying very short term, I don't expect much of a pullback. I wouldn't be surprised to see us go above 25, but it's quite dangerous getting long above 25. That's all I'll say. You know, I would rather wait, see it all play out. I'm already long, so I don't have to do anything. But if I had no position now, I don't think I'd be buying, because I still think it pops down again for another little look. And I, you know, assuming I just come into it now, you know, I can't advise you, but personally, I don't think this is going to sustain. I mean, like I say, 25 to 33 is still probably a good hit if you want to buy it. But at any stage now, the rug pull could come. I just think they need to get people more interested first, which is why I'm a fan of it going a bit higher. Gavin, if you can't see, just F5, it comes back. Alan J says, thanks for this update. And Terry Dragster says, cheers, no problem. Now, going over to TradingView chat, this scenario is too brutal. Do you provide any short-term setups in your Discord? Yes and no. I have to say that the whole point of our education in our Discord is that we try and teach people to get away from day trading, because day trading is the hardest type, and we would rather wait for all the planets to be aligned and then go from there, where we have fewer trades but a far greater probability that we're on side. It's midway through. I've got to plug my book. The book is there, The Clever Day Trader. It'd take you a train ride to read. It's free right now for 5 days on Kindle. Download it, read it, please review it, because I want people to understand how easy it is to do your nuts in the first 3 months of your trading career. And the secret to trading is to get through that 3 months with a greater understanding of yourself and what's involved in trying to make money trading. So if anyone wants to be a day trader, read the book. If they want to be a swing trader, read the book. If they want to trade every month, like we sometimes do, read the book. It will help you in all ways. Doesn't matter. And please review it. That's what I really ask. I mean, it's free right now, so it can't hurt you to read it. It'll take you 30 minutes and review it, because other people need to know this. It's a big bad world out there in trading, and the powers that be do know that most of you, 90% of you, lose your using money in 90 days. 90 is the rule. It's well known. It's just not to you. Okay, so get the word out there, and you've got more and more people being able to stay the course, because it will take brutal self-discipline to stay alive for those 3 months, and then you can start learning. Before that, all you're doing is basically struggling to stay at the surface. So I'm not going to lie, iJustCoin, and say, do I provide short-term setups in my Discord? No. In general, we don't say, look, here you go. I will say that we're following AU, and we've got MJF saying Aussie US, and we saw a short-term setup, and ironically, though it went right at first, it immediately reversed. and which is the bewildering nature of short-term setups. But we did show that, so I suppose the answer is yes. So I was pointing out a Wyckoff on a 15-minute chart, which was more or less picture perfect. Looking at it back now, I'll go through Aussie in a sec, and we'll talk about that setup. iJust Coin, thanks Paul, I'm going to subscribe for 3 months. Well, that's very kind of you, thank you. But a free book is a bargain. Well, it is, guys. Take the free book for God's sake. And I've got to do, oh yeah, like and subscribe. If you're on YouTube, like and subscribe. Apparently I've got to tell you that the whole time. I'm not very good at all this marketing and so forth. Right, let's move on now. We'll look at Aussie US because there was an interesting Wyckoff setup. So in general, we're not sure where we are in Aussie. There's definitely two different scenarios for Aussie US. Either this yellow, oops. So you've got this yellow Elliott wave, 1, 2, 3, 4, which means we're probably, we are thinking it's possibly going up from here. Or it's, let's draw a different one. Because this is quite a long one, we're actually thinking, let's do a different colour, that this could just be a 1, 2. But either way, we're up from here or around here is what we feel. And we are seeing this either way. So either that's a 1, 2 and this is this here, this one we're in now is the 1 of a 2, 3, or it's the 1 of a 4, 5. Either way, it feels like a 1 to us. It's impulsive, and it's going slightly higher than anyone feels it ought to, which is always a good sign when you're looking for impulsivity. And so we were expecting, and there's a sort of, if we go down to the 15-minute count and just go from here, what we were seeing was, as we go back to it, just want to make sure I get the right exact area for it. Yeah, I think this is it. So it's the area from here where we saw what saw to us as a buyer's climax around here. And then you get an AR, an automatic reaction here. So this was a short-term setup. It's on the 15-minute chart, which might help you. Then we saw a secondary thrust here. Oops. And a sign of weakness down here. I'm just going to draw them on now. So you have a sign of weakness here. Then you get a UT, a UTAD, and at that point, once it drips down beneath, you can take a high risk trade around here because it dips under the UT again. And you've got the advantage there that your stop loss is literally above the UTAD. So you've got quite a short stop loss, whereas you're expecting the thing to go down beyond the bottom of the sign of weakness. So if you put in a trade there, you end up with a trade which has very, very high risk reward. So you can do these, and even if it only just breaks out the bottom, that's a 7R. And the real target was kind of here, which is like 8 and a bit. And of course, once it starts dripping down, you can actually remove you move your stop losses down and get it to even. So what ended up happening, let's just go back. So after the UTAD, we then got a textbook test of the lower area, a textbook retest of that level there, and then it plunged perfect, except that it then reversed suddenly to mess everybody out. And this is games. This is games played by the big boys. This trade was going to have to close anyway. The right time to close it was at this area here, because here you had this previous bump. So around 00 was the right time to close it. But that's hindsight. When it's going down, absolutely steaming down like a rock, it is always hard. And you think to yourself, well, if I was trying to buy it here, I'd wait. I'd be sitting there and I'd be saying to myself, well, I want to see some reaction here. I want to see if we get a bit of a wiggle, because if it just goes hammering straight through, I buy it and I'm stopped out in seconds. I don't like that. And so when you're thinking about buying back a short, you kind of have the same thought. And The trouble is, if you're looking at a buy and you miss it, that's not a problem. But if you're short and looking where to cover it, you should probably cover some at the obvious next level, even if you think this is a big fat Wyckoff, which is, it's really worked. Risk reward good, but it didn't work in that case. So there's our effort at a short-term analysis. So we got the analysis right. We did see the sell-off, but you needed to be pretty nimble to take your take your cash off the table. So there's a short-term one. So Aussie US, what do we think? We still think it goes up. We still think, in terms of where we are on the daily, we're going to reach out to this 1 here, and then we're back for a 2. Now where it comes back to, I guess probably best if you subscribe to Discord, because that is very useful information. So because you don't know whether to wait till here, or whether it's only going to be a dip, or here or here, where is it going to go down to? Because that is where we want to strike. When we think we're at the 2 and we're seeing accumulation, that's where we want to strike and get long. And then we know for the next few months it's going up, and that's a lovely thing. And that's kind of the way the method works. So there's nothing about that in the book, which I've got to keep plugging. Free ebook, you can see it there. Look it up, buy it, review it, please. But over on Mayfair Method, this is kind of how we want to get involved. Can't give away too much, because after all, lots of people have paid decent money for it. So pay some decent money, and then we'll tell you why and where, and then you'll be able to work it out for yourself. It's like teach a man to fish time, okay? Because giving you a signal at a certain time in a certain thing doesn't teach you anything. And you may not take it at the same time as us, you may not take it at the same risk reward level, you may end up finding that it doesn't work for you because you get stopped out because our stop loss was a bit lower, or we decided to get out of the, all these things you need to have paid up and look big. So that's where we're thinking Aussie US. GJ for Gavin Magnus Pays. GBP, JPY. Now this is known as the beast for a reason. I brought that up to the top because I was studying it. Where's it gone? There. Okay, so that seems to us to be kind of where we are. It is kind of obeying Elliott waves. I don't think I'd have put that on if I didn't believe that it was somewhere in there. And so now this looks like, of the 4-5, this might be the 1 and coming back for a 2. So that's where I think we are in that. Yeah, the internal 1, because I don't think that's made a 3 there. Giving it a little bit of, let's get rid of some of this text. I think it's interfering. Sorry, I'm taking a while. I can't work out what that is. What's that BC doing there? Can't see it. But yeah, what do we think we are? We're probably coming back for a 2. So this is all kind of very much, you have an inversion point here. Inversion point is something I've called, is where you've got all this above the line, all this below the line. So we're testing it. If it while it stays below the line, you've got to be slightly bearish. Once it's broken up above the line, you've got to be slightly bullish, and that's kind of how I feel about the GJ. He's all legging. Good afternoon, Paul. Nice to see your cute face. It's beautiful, isn't it? Honor. Bank of Dave. You must watch it. Okay. I've heard of it, to be fair. Going back to YouTube channels, Oripasti says, I think you may just sideways up here until next Tuesday. Fed interest. Yeah, I mean, that's the thing. And you might not get the big pullback. You might get another rally just to mess everybody. But the pullback, when it comes, we're looking at the pullback. That's the way we look at it. We're not saying, oh, it's going to sell here. It's going to come off here from here. Though that trade the other day was a short trade, there was only a short-term short trade. Okay, so that's how we think. Is there anything else? Before I say one more time, it's a free ebook. It'll keep you in the game. 3 months. That's all you need. You need 3 months and still be in the game at the end to learn an awful lot about yourself and about day trading and about trading in general. And that, if you follow the rules in my book, you will still be there after 3 months. Okay, if you don't, then I can't help you. But it will save you. I mean, the average person puts $5,000 into an account when they start, and they'll lose 90% of that in 90 days. 90% of them will. So that's $4,500 for the average person that I've just saved you. All you've got to do is read the book, and it's free until the end of the month. The thing I ask most of all, I'm giving it away free for 5 days. This is so that I get you guys who've been following me and understand that what I'm trying to do is be unbiased. I want you to review it because I want more people to last that 3 months. Okay, I'm not expecting to make masses of money out of it. I mean, full price it's only $2.99. I mean, I'm not going to be the New York Times bestseller. There's probably 30 of those right now, and I'm not ever going to be one of them. I'm not looking to make that much money out of it. I'm obviously using it to promote what we do at Mayfair Method, fair, but there's gems in there. There's really, really good rules that will stand you in good stead. And like I say, it won't take you that long to read, but you'll learn a hell of a lot. And then over the 3 months after that, you'll learn even more. Now, YouTubers, please like and subscribe if you enjoyed this material. And the rest of you, I wish you a good trading week and trading weekend. Yeah, look at the rules. Take it easy.